Happy Monday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Today's video contains this month's first of two sponsored features. We will be covering this exciting opportunity later in the video, but first up, we begin in North America. Let's jump in. Hollywood is preparing for another wave of consolidation and uncertainty as Netflix moves forward with its landmark $83 billion acquisition of Warner Brothers, a deal that has drawn fierce resistance from entertainers, unions, and cinema owners. If approved, the transaction would mark one of the most consequential shakeups in modern entertainment history, further blurring the line between technology and traditional studios and raising fears of sweeping job losses across Hollywood. The Writers Guild of America and the National Association of Theatre Owners have urged regulators to block the deal, with actress Jane Fonda warning that it, quote, threatens the entire entertainment industry, end quote. Their concerns echo the anxieties rippling across Hollywood, potential layoffs, shrinking opportunities for film distribution, and a future where only a few dominant players dictate the fate of creators. Netflix emerged as the supreme winner of the Warner Brothers auction, beating out others just months after Skydance acquired Paramount. The back-to-back sales of two legacy studios highlight how deeply streaming has upended the entertainment landscape, and how aggressively Silicon Valley is expanding its footprint, alongside Amazon's purchase of MGM and Apple's growing studio presence. Netflix's move cements tech's dominance in Hollywood. Industry veterans worry that consolidation will reduce the number of potential buyers for films and series, worsening an already fragile job market. Quote, for the people who work in Hollywood, there's going to be an income crunch, end quote, said Stephen Galloway of Chapman University. The industry has shed tens of thousands of jobs since 2020, battered by the collapse of the streaming bubble, lengthy labor strikes, and a still sluggish box office. Some cultural commentators argue too that Hollywood's stances in the ongoing culture wars have alienated some audiences. The downturn has reverberated across Los Angeles, hurting everyone from makeup artists to local restaurants. Netflix insists that the deal will expand, not contract, creative employment. Co-CEO Greg Peters said Warner Brothers' production capacity would grow under Netflix's ownership, promising, quote, more opportunities for creative talent, end quote. The company also signaled support for theatrical releases, a notable shift from its historically streaming-first strategy. Regulators in the US and Europe are expected to scrutinize the merger intensely, as the combined streaming powerhouse would serve 450 million subscribers and command a vast library including HBO, Harry Potter, and Friends. Netflix has agreed to pay a $5.8 billion termination fee if the deal collapses. Despite the turbulence, some insiders see a silver lining. Quote, if Warner is going to sell to one of these hyenas, end quote, said producer Tom Noonan, quote, it might as well be the smart one, the alpha, end quote. Next up, we move across the Atlantic to Europe. Spain has launched a major containment operation on the outskirts of Barcelona after a cluster of wild boar infected with African swine fever raised fears of a wider outbreak that could devastate the country's crucial pork industry. Soldiers, rural agents, drones, and police dogs have been mobilized to comb a 6-kilometer perimeter around the site where the first infected animals were first found last week. So far, 9 dead boars have tested positive. Around 500 personnel, including 160 troops from the Military Emergency Unit, UME, are sweeping the rugged terrain, analyzing carcasses and monitoring for any movements of infected animals. The European Commission has imposed temporary farming restrictions across 91 municipalities in Barcelona province, though none contain commercial pig farms. Spain, the EU's largest pork exporter, has already seen Mexico and Japan suspend imports, and more than 120 export licenses have been revoked. Officials say the priority is preventing the disease from spreading north towards Spain's densely concentrated pig farms. Drones equipped with thermal cameras are being used to detect boar in remote forested areas, while disinfection checkpoints ensure people and vehicles do not inadvertently spread the virus. Though harmless to humans, swine fever can devastate livestock herds. Experts warn Spain's growing boar population, fueled by warmer winters, fewer natural predators, and expanding urban interfaces, has increased disease risk. The source of the outbreak remains unknown, but contaminated meat discarded along transport routes is a leading theory. Next up, we move to Japan. But first up, silver is exploding. And why? Markets are reacting to the AI robotics drain. Every single advanced technology crucial to the US versus China's superiority race, from the fastest services to the sensors to every humanoid robot, is built on silver. And it's not just the best conductor, it is the irreplaceable catalyst for the future economy. And today's video sponsor is tied to this dual-die trillions-dollar race between China and the United States for the next industrial revolution. Humanoid Global Holdings, ticker symbol RBOHF. In a world where only big companies have access to investment in this massive emerging space, Humanoid Global Holdings gives regular folks the opportunity to basically invest in a humanoid robotic sector index. Shares of Humanoid Global Holdings are available through interactive brokers, Schwab, Fidelity, E-Trade, and others. We are not just early with this one, we are standing at the 0-mile marker of what could be the most profound productivity shift in human history. Humanoids are the quintessential early-stage investment, and to capitalize on this window of opportunity, Humanoid Global Holdings is one of the only publicly traded companies that is a pure play focused on this sector. Each of us gets very few chances in life to be at the inception moments of transformative industries, part of the birth of ground floor opportunities with global influence that will result in trillions of dollars of wealth created. Humanoid Global Holdings has publicly committed to or closed indirect strategic investments in the following 5 companies, representing key parts of the emerging humanoid robotics ecosystem. Again, these are startups which are private, so there's no other way to gain exposure to them for the average retail investor. 1. Agility Robotics, developer of the bipedal humanoid robot Digit. Shareholders of Humanoid Global are invested in Agility alongside Amazon Industrial Innovation Fund and NVIDIA. 2. Apptronic, developer of the general-purpose humanoid robot Apollo. Shareholders in Apollo are sitting alongside Google and Mercedes-Benz. 3. RideScan, developer of an AI-powered safety and performance platform for autonomous robots. 4. Halt Robot, a global marketplace that connects businesses looking for automation with robotics solution suppliers. 5. Formic, a company offering robotics as a service RAAS to small and mid-sized manufacturers. This focuses on the development and financial model, RAAS, that lowers the barrier to entry for automation. The most important point here is this: Humanoid Global Holdings gives an investor the access to the humanoid sector in its startup phase when companies are still private, the type of access that is virtually impossible for the average person and is reserved for well-connected angel investors, hedge funds and endowments, and big tech. The access directly investing in private startups makes Humanoid Global Holdings a standalone investment company which is publicly traded and available to anyone, not just accredited investors or funds. Even ETFs, which will be available later on, will be mostly invested in publicly traded companies, not in startups. This is unique to Humanoid Global Holdings. Do your homework on Humanoid Global Holdings, one of the only publicly traded humanoid companies out there this early. This is a sponsored feature, it is not individual investment advice. More information on this company, including relevant disclosures, are in the description below. A big thank you to Humanoid Global Holdings for sponsoring this episode. We now return to regular coverage. And finally for today, Japan's economy contracted more sharply than initially reported in the 3 months through September, reinforcing Prime Minister Takaichi's argument for robust fiscal support as she begins her tenure. Revised government figures published today, Monday, show gross domestic product shrank at an annualized rate of 2.3% in the third quarter, worse than the preliminary 1.8% decline and marking the first contraction in 6 quarters. The downgrade was driven by weaker than expected business spending and housing investment, underscoring persistent fragility in domestic demand. The disappointing data arrive as Takaichi rolls out a 17.7 trillion yen, $114 billion stimulus package, the largest fresh spending plan since the pandemic. The measures include utility subsidies, temporary tax cuts, and wage support programs targeted particularly at smaller firms. With private consumption still subdued and inflation eroding household purchasing power, the downturn strengthens Takaichi's justification for continued fiscal activism. Government estimates suggest the package could lift GDP by an average of 1.4 percentage points annually over the next 3 years. Economists say the contraction may provide political cover for additional spending, though some caution that Japan's near-zero output gap limits the case for persistent largesse. Still, analysts expect growth to rebound in the coming quarter, assuming the recent weakness in exports and housing proves temporary. The revised figures also complicate the backdrop for the Bank of Japan, the country's central bank, which is preparing for a closely watched policy meeting on the 18th through 19th of December. Despite the downturn, investors now assign roughly a 90% probability that the Bank of Japan will raise interest rates this month, following strong hints from Governor Kazuo Ueda. Bloomberg Economics expects the central bank to look through the soft GDP data, viewing it as a temporary dip rather than a derailment of Japan's broader recovery. Risks to the outlook remain. The yen's persistent weakness, hovering near 155 per dollar, continues to fuel inflation and squeeze consumers. Meanwhile, deteriorating relations with China threaten tourism and trade flows, while US tariff uncertainty has already hit corporate investment. Still, economists see gradual improvements ahead, supported by stronger earnings and modest gains in household spending. We will need to see. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Monday, have a productive week, and I hope to see you for another episode tomorrow.